A great financial analyst, the definition is an entity that turns coffee and Red Bull into profits. Old math joke that a math professor is someone who turns coffee into theorems.
So they've been unprofitable 3 years in a row, according to the income statement. But we know, because you're not a noob, you know the income statement is one half of the story, the other half is the cash flow statement. GAAP, net income, is one thing. That's the income statement. Cash flow statement sort of tells the truth without the accounting, but the accounting is sometimes important too. You can't take one without the other. Look at the inventories. We usually don't look at companies like this, where their inventories are so large, but they have a year's worth of revenue of inventories. In biopharma, you don't have that. In software, you don't even have anything close to that. So you don't even have inventories at all. So inventories, the problem with inventories is working capital, right? Inventory costs you money to make. You have to buy the raw supplies, you have to make the work in progress, then you have to make the finished good. All of those cost capital, right? All of those are your money that you have to spend. So there's quite a intensity, it's sometimes called capital intensity, that comes with that. That's kind of why Boeing is like fundamentally business. We'll get into that later. There's a trade-off for having a monopoly. But take a look at the property, plant, and equipment, which I've told you guys many times is one of the most important things. It's actually rather small relative to what I would have predicted. They only have $10 or $11 billion of capital. That's not that much. You would have thought a serious manufacturing company like this would have massive amounts of factories. That's odd to me. I wonder if it's made through, subcontractors or something like that. But the margins are so low. Look at the gross margins, 10%. Something's not adding up here. Because, I just don't understand the business model, but like, you have a 10% gross margin as a manufacturer. That's less than, what kind of company has that low margins? With that low margins, you would think you have this massive CapEx. You know what it is? It's probably all these subcontractors. That's what it's got to be. Tons and tons and tons of subcontractors that are there. This guy makes the windshields. This guy makes the radar. This guy makes the seat. This guy makes the chassis. That's probably what's going on there.
So again, one of the things a lot of people ask me, and I think one of the iced coffee guys tweeted me the other day, I don't have a lot of money. How do I get rich? Well, I was in this exact position when I was 16. And I basically said, I looked around Wall Street and I said, these people need to know what to do about drug stocks. And if I become a drug stock expert, and I don't have any money at this point. I'm a 16-year-old Albanian immigrant son. But I see that, Wall Street's really exciting. People are trading millions, billions of dollars. So for me, I liked drugs from a childhood. I really enjoyed chemistry and biology. And I thought it was amazing that medicine could change people's lives like that. And you can go from dying to healthy because of a drug. You could also go from healthy to dying. And it was all through chemistry and science, and I loved that. The point is that even with no money, I was able to provide valuable advice that people would pay for. They'd say, Martin, what stock do I buy? And I sometimes was right, sometimes I was wrong, but I also learned a lot about medicine. And that was invaluable when I started a drug company.
You can't just race through it and make your trade like some maniac. That's how you lose money. Take it from me. I used to do a long time ago, I used to plan these trades out for months. Meticulous research, burning the midnight oil. Cleaning lady came in and left. Second cleaning lady came in and left at midnight, the midnight shift. Security guards there at 2 a.m. looking at me like, and then guess what? The trade would work. Trade would work spectacularly. I'd make millions. Then what would happen? I'd start feeling myself and I'd say, you know what? I'm just gonna make a trade real quick. I like this stock. Ooh, lost 50 grand. That's no big deal, I'm still up. Make another trade real quick. Ooh, lost 200 grand on that. Before you know it, all the money's gone. You gotta keep your discipline. All the profits are gone. Don't try to make, a fortune in 5 minutes. If it were that easy, everybody would do it. Not saying you can't make money trading, you can. But you have to be extremely disciplined. It's gonna be a while before they turn around because it's that kind of long-term business. And it's not, the funny thing about the stock market is if a process like a turnaround is going to take a long time, the stock market is a discounting machine. As long as that process is certain, the market will discount it immediately. Because the market's very smart. It's a very strange phenomenon, but it is the case. Sometimes the market has a little myopia, and it's not as smart as it looks. And that's for us to take advantage of. But in general, the market's very, very quick about like, oh, okay, there's going to be a turnaround, and the stock will just double. And you'd be like, yeah, but the turnaround was supposed to happen over like 10 years. Market don't care. If it's uncertain there'll be a turnaround or not, different story. And if you don't know when the turnaround's going to happen, it's going to take forever and ever, different story. But
I'm sorry, you just don't deserve it. You didn't vote for me. You don't deserve it.
There's no discount for godel. The price is gonna go up. But if you lock in the price today, you keep that price forever. That's the only one concession I'll make, because last time I raised prices, you guys got mad. I got locked up. It wasn't good. So don't complain when godel's $500 or $1,000 a month, like Bloomberg. It's $3,000 a month, and you had the chance to lock it in for $40 a month. 40. You got to raise that price now, man.
and this is what the process looks like. I mean, you got to look at hundreds of stocks before you buy one. Does that sound fun to you? If it sounds fun to you, do it. But if it doesn't sound fun to you and you think that sucks, you're in the wrong game. Being in the stock market, it's like going through a garage sale. Working in the markets is like going through a huge garage sale that never ends. A never-ending garage sale. And you have to be happy at how big the garage sale is. Ideally, you want it as big as possible. And you're going through each stock, each little trinket in the garage sale. And you're looking for the one trinket that they mistakenly left out that's worth a ton of money. You know, sometimes there's these like, maybe it's a little old lady in my head, but it's whoever you want in your head. And they're just going through all this rubbish, basically. And then they find this one thing and they're like, aha! This is a official what is that, those things called Swarovski? Or it's an official Fabergé egg. Imagine that, the Fabergé egg. And it's sitting there for 20 bucks. It was just passed down and it's worth millions. I need to know this was an official 1900, look at this thing. And you just look at that, you know it's worth something, right? So you have to peruse each one of these very carefully. But if you just go to the garage sale and you see 5 things, one of them is GameStop and one of them is AMC. And you see a bunch of people crowded around the AMC. It's literally, I don't know, this. It's a vitamin bottle. But everyone's crowded around it and they're looking at it and they're saying, wow, look at this vitamin bottle. It's only $20. And over there's a Fabergé egg sitting there that's worth millions, and it's $5. But the row of things that you have to examine is enormous. There's thousands of things. And you got to go through each one. And then if you have the patience and the time to go to the Fabergé egg one, you can make millions. But if you're stuck on the AMC one, or you get bored after you look at 5 or 10 of these, you know what, there's no Fabergé eggs here. I'm done. I can't look through all these. That's why many investors, the best thing they can do is have a clear schedule. They have to have the freedom to look at as many stocks as possible. If your day is spent going to this meeting and that meeting and this meeting and that meeting, and you have a ton of distractions, you can't be a great investor. You need basically all day and all night to be able to look for the Fabergé egg, look through the garage sale. And needless to say, if you don't like looking and examining things closely, this isn't the job. A secret about these open label studies, and I'll tell you guys a little bit of Wall Street secret that may be obvious to you, maybe you already knew it, or maybe it's brand new to you. If you know where these studies are, like for example, the Sarah Cannon Research Institute in London, and you ask the doctors who work there, maybe you're friends with somebody who worked there, or you went to high school with a doctor there or something like that, and you say, Dr. Smith, are you in the Iovance trial? Yes, I am. How many patients have you dosed? Well, I dosed 5 of them. How are they doing? Well, 4 of them got cured. You may want to go buy the stock. You may not want to go buy the stock, depending on what your lawyer tells you. I don't suggest it either way. But it is something that could be due diligence on one hand, but some people may call that insider trading as well.
got to be a little bit careful. It's complicated. What if one of the patients posts on social media? There's a lot of ways to look at it and think about it. If somebody tells you the entire study results of the whole study, I'd say that's insider trading. But if just one doctor says the patients are doing well or something like that, well, it's only 5 patients. There's going to be 100 patients in the trial. Does that really mean anything? You know, I could entertain you and talk about hundreds of stocks at once, but it's not going to help you. This is for people who really want to understand how to do professional investment analysis. I'd rather talk to 10 people that are going to end up becoming hedge fund managers or money managers than talk to 50,000 people that look at their 401k or, you know, something like that. I'm not really interested in entertaining anybody, although I'll try to do it here and there. My main goal is to teach the next generation of great investors. So if this is a little boring or less exciting than some of the other channels you watch, good. You know, that's it's not meant to be easy or fun. It can be a little bit fun, but it's definitely not meant to be easy. And it's satisfying after you do all the hard work and you see the fruits of your labor. All right, so I mean, it's kind of like, again, a smart strategy. Like, of course, we're here to look at stocks, but if you think about becoming an entrepreneur, let's say you wanted to be rich. I don't know if any of you want that, God forbid, right? You know, look what this company did. They took an old animal drug for dog mites. And they said, well, it kills this 𝗕𝗵𝗆𝗍𝗥𝗧 species, right? So if it kills this 𝗕𝗵𝗆𝗍𝒂 species, then it'll kill it for humans too, right? And if it's safe, we can make it a drug. And they did. And now it's $1 billion company. Kind of amazing, huh? Sometimes I joke that if you put me on a PubMed and give me 12 hours, I'll give you $1 billion company. The problem is you have to actually execute the $1 billion company. And management doesn't grow on trees. Management's difficult. All right, so let's go to their website. That's usually a good place to go. Tarsus Pharmaceuticals. They're selling really well. I mean, it's one of their first quarters, right? Let's see how much they sold in Q1. Wow, that's a lot of revenue. Can you imagine? You took an animal drug, put it in humans, and now you're selling 40 million in a quarter. That's 160 million run rate. $160 million. Yeah, I'll make fun of those guys that sell courses if YouTube will let me. I don't want to get on the wrong side of YouTube. Cathy is coming to Godel. Just you wait. Nothing will ever be the same once Cathy shows up. Cathy's not a human though. Cathy's AI. Spoiler alert. You can do citizen petitions. I've done them. I did a citizen petition to stop approval of several drugs. In fact, one I did, I've done a lot of things. One of the things I've done private presentations for FDA to stop approvals of a drug. For example, Mankind inhaled insulin got delayed because of my efforts. I've also had citizen petitions fail for NeoProbe and others. I also had a private meeting with FDA regarding the approvability of lorcaserin, which was a weight loss drug that would end up getting removed from the market for a lot of the reasons that I included. So there's a lot of chicanery that can happen in medicine. Usually it's pretty above board, but sometimes stuff like this doesn't give medicine a good name. You know, it seems like a really smart management team, like they could, I wonder how much of the company management owns. That usually suggests they'll work pretty hard. Not always. Oh, 2 guys own. A bunch of guys I know own. Smart people, actually. Very, very smart people own 10% of the company each. That's good. You know, I don't think that just because like your friend or a smart fund owns a stock means that you should buy the stock. There's a lot of reasons why. And in my early days of my career, I used to be really interested in that. And these days, I'm basically completely uninterested in who the other shareholders are. It's basically irrelevant. What matters is, do you like the stock, not somebody else. The reasons are, 1, every successful fund goes through a period where it's less successful. Partially that's related to hubris, partially size, partially bad luck, partially market conditions. So just because a fund has returned, say, 30% a year, which is amazing, legendary performance, doesn't mean it's going to keep returning 30% a year. And it certainly doesn't mean that that specific stock and that specific portfolio is going to go up. So you really can't just take, oh, so-and-so owns the stock. Well, so-and-so has had a hot hand, but hot hands go cold, and you think your hot hand will last forever, and sometimes it doesn't. So there's that. The other reason is you have probability distribution of returns. No fund has only winners. That just doesn't exist. Even the very best funds. Warren Buffett is like 80% winners, but he makes like 4 trades a year. So you could take that approach maybe. But most of these funds don't make 4 trades a year. They make maybe 400 trades a year or 4,000. And, they're going to be right 60% of the time, but you're not going to get a big edge by just randomly picking a stock out of their portfolio. You've got to like it. You've got to be convinced. I don't even think you should put any credence at all into it. In fact, if you've got a bunch of hedge funds in the stock, that kind of means that they're the supply, right? And you're their exit liquidity. So I'd almost rather have it that there are no hedge funds in the stock and that the buyers will be institutions that'll never sell. But again, better to just ignore it all and focus your mind on, okay, is this a stock I like? Can I live with this? I would definitely box Charlamagne for money. I would box him not for money. I'd box him just to box him. First of all, I'm about 6 inches taller than him. So I would body him. Boom, when the ref's not looking. And even if the ref is looking, it's over. It's fine. I'm disqualified. So what? Your face will never be the same. I'm not 6'3", I wish. I'm 5'11", 5'10", actually. But Charlamagne looks like he's about 5'2". I might go on DJ Academics. I don't know, I just have this thing in the black community, man. I love the black community. I love black culture. Black culture is pretty heterogeneous. Like, historical fundamentals data for equities is a non-professional. When we're done, Godel is going to be the AWS of finance. Every kind of data, everything at a reasonable price, no stupid one price subscription for everything. We currently, by the way, have one price for everything, but we will change that over time where ideally you get what you pay for kind of thing. Software, they're very different things. Biotech, kind of like the industry of biopharma kind of sucks because of the patent expiry. It's just sort of this fundamental limitation to the industry, something you have to get over or just come to terms with. You can't get this infinite growth like you can in software. So it's just a fundamentally different business. Sometimes it's hard to even call it a business in a way, in that it's like got this duration. And in a lot of ways, it's kind of like the insurance business. I once was talking to one of the biggest hedge fund executives about this, that in the insurance business, you write a premium and you either pay it out or you don't. And when you add these premiums together, you get a premium book. And there's loan books similar in finance and banks. And in pharma, you're sort of building this pharma book, if you will. And they're basically these discrete cash flows that will eventually roll off, just like a premium book. So there's sort of one way to look at it as financial assets like that. Software is very different, almost like a consumer product or something like that. You can really build up your value over time. In pharma, it's kind of like the bigger you grow, the harder you'll fall when you go generic. So, and we've seen a lot of companies that have had those issues over the years. I would agree that it's very hard to beat the market. You would have to be basically a professional, meaning that your whole life is dedicated to investing. And even then, most of the people who have that job don't beat the market. So it's a competitive field. It's kind of like MMA or boxing. Like, you could be a professional boxer and still have a less than 50% win rate. And you're a professional boxer. Look at the NBA. Look at the worst team in the NBA. My hometown team is pretty bad, the Knicks. The people who play for the New York Knicks are amazing basketball players. They're some of the best in the world. But they still have a terrible winning percentage compared to great teams like Golden State or something like that. So even professionals can be not good professionals relative to their rivals. We sometimes say, oh, those guys are bums. Well, they're not bums. They're amazing basketball players. They're some of the best of the best. But there's others that are still better. Wall Street's the same way. There are people that make billions of dollars on Wall Street, and there are people that struggle and, they don't do that great. And just to get on Wall Street requires some pretty deep dedication to success. But then to prevail and succeed in Wall Street, it's very, very difficult. Okay, let's keep looking.
Yeah, I know stock-based compensation is Christos. SBC is hard to value. Traditionally used Black-Scholes model, and Black-Scholes is not a reliable sort of way to measure stock option cost. If all the stock options expire worthless, then they didn't cost anything. It doesn't mean it didn't hurt the company at all to issue stock options, but it's not really dilutive, and that's what we worry about.
So you nearly ruined the entire crypto industry. What do you have to say for yourself?
Hey, I get where you're coming from, but I don't think it's fair to say I nearly ruined the entire crypto industry. But I'm doing everything I can to make things right. I'm committed to transparency and working with regulators to find a path forward for this industry.